Welcome to the call. Welcome. Man, I hope everybody's doing well. But I'm excited. It's an exciting time for me right now. Not just with Trey, but it's always good to have family around. And with me being out here, I don't have any family out here. But I got a lot of people who have become family. But right now, I got a lot of family in town right here at the house. And been enjoying myself with some family time. So yeah, I'm a little excited. So let's jump in and see what we got going on. Before we start, you know how we do. We always go to Barbara so she can make sure we cover our business before we get going. Over
Here
to
we
you,
go.
Barbara.
Our disclaimer for Futures and Commodities Trading Group. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means that you alone are responsible for your actions in any trading or investing activities.
Awesome. Great job. And now we do our other thing, which is throughout the week we always have quizzes that kind of go over what we talked about on the last call, what we covered on the last call. And usually Dr. Mel is with us to do that, and she's not here at the moment. And her fill-in is normally is Dora Samuel. I don't know. Dora is Dora on the call?
Hi, yes, good
Doors
afternoon.
on the
Just got
call.
in.
Hey, Dora.
Hi,
Hey, I'm not sure if you knew Dr. Melville wasn't going to be here right now, but are you able to do, or you need Barbara to do the quizzes?
I could do it. I
Okay.
let me get on to.
All right. If I'm not mistaken, I think we had three instead of two.
Okay,
So
we just have to
yeah, I think we had three quizzes this week.
20 seconds. Okay, let me just kind of. $20. Okay.
Yeah, I was told my quiz is too easy, so I'm finna amp it up, y'all. Y'all get ready for this week.
Okay. The first quiz. What animals are used to represent the behavior direction of the market? Again, what animals are used to represent the behavior or direction of the market? Somebody
Mm-hmm.
chat.
See if anybody know this, and I ain't heard
Bear and
nobody say
bull.
that. Mm-hmm.
P.
Bear
Brooks
and bull.
says bears and bull in the chat.
Oh, that they in the chat. That's why I ain't heard that. Okay.
Mm.
I'm gonna put it in some sites like
Yeah.
So what answer did we get, Thor?
Bears and bull.
Bears and bulls.
Mm-hmm.
Nobody wanted to unmute today, huh? All right. So what are they correct, Thor?
Bear and bull. I want to unmute. If that's unmuting is the problem, I want to solve the problem. Bear and
So
bull
the bear and the bull.
Mm-hmm.
Anybody know why we use the bear? Why did the market use the bear and the bull?
because it illustrates how the market is what the market is showing. If it's bearish, it's going in a downtrend. If it's bull, a bull is very aggressive, so it's going up. No, it's okay. I'd rather deal with. I don't know if it being aggressive going up is a good thing, but that's the symbolism. That's the
Yeah.
symbolism.
Hey Johnny, can you tell us the reason that the bear and the bull are selected? Why they choose those two animals?
Well, let's see. Every bull I've ever seen, when he gets ready to fight, he thrusts his head up from low to high. And the bear uses his claws to strike down on its prey.
That's right. And that's why they are selected and chosen for, for the direction that the market is trading in. Great job. Appreciate that.
Okay.
And
And
the
the
other
second,
symbol is they're very strong and muscular, and whichever direction they're gonna go.
Yep. All right, Thor.
okay. The second quiz. Is the futures market regulated?
Mhm.
Yes.
Okay.
Yes,
Pam said yes. It is
yes,
regulated.
yes.
Okay.
Highly regulated.
Oh, somebody said highly regulated. Okay.
Right, and it was B. We had choices. We had choices in this question. A
Mm-hmm.
was no, B was yes, C was maybe, and D was not sure. And everybody answered yes, which is B.
Great.
Yeah.
All right. Good job.
And the third quiz. Producers and commercials are the most important in the market because they control a large number of futures contracts and take delivery of the commodities. Okay, I'll say it again. This is a statement. Producers and commercials are the most important in the market because they control a large number of future contracts and take delivery of the commodities. Now, is it A, true? Is it B, false? Or C, not sure?
False.
Okay.
Oh,
and the key word is most important. It's not that they're not important, but they're not the most important.
We are the most important.
Yes, sir.
Wait,
Key
I'm
word is
lucky.
most important. I think y'all got the tricks in there, D. What you doing? You trying to play around? No, they are important, but they're not the most important because we being in the market adds liquidity to the market. And you need liquidity for them to be producers because you need to have revenue circulating in the market. Yeah.
Oh man, what you think, Thor? They on fire today, right, Thor?
Oh, yes, very good. I'm
Right.
impressed.
Very good. Right. So we're gonna move on. Can we get everybody to mute their lines out now that we're through with the quizzes? And let's get it going, Barbara.
Okay.
So we're going to talk about what does the futures market offer. So we're going to talk about some very key and important things that the futures and commodities market offers you.
All right. In the futures, you can trade nearly 24 hours a day. What? Around the clock. Are you sure about this, Barbara?
6 days a week.
What? That, you know what? That's really huge. Because when I started trading, that wasn't the case. So you saying almost 24 hours and 6 days a week. And you know what? Truth is, with the opportunities that's in the market, to be able to have that opportunity to trade, almost 24 hours, that's truly a blessing because that means that no matter what your lifestyle, what your schedule is, there's always something being traded whenever you got time, to get in the market and do some trading. Also, too, when you think about what it says, 6 days a week, I want y'all to realize that basically, when we on this call, a lot of times when we on the call, this is when the market started and opens back up and starts the week on Sunday evening, not on Monday morning. So a lot of times before we get off the call, it's starting, the market is starting straight. All right. So take advantage of the market opportunities without being glued to the charts. What does that mean, Barbara?
It means that a lot of people think that they have to sit and look at a chart all day. And you don't. We put in certain type of orders because we want the market to come to us. And just by you taking some time out of your day, you can learn how to do this. It's not something you got to sit in front of the computer or your phone all day. You can go about your normally regular scheduled program and you can still build wealth.
So that you saying we don't have to watch every tick?
No, you don't have
What?
to.
And that's what's so amazing, because most people think that we have to watch every tick when we don't. Like Barbara said, you can go about your day. Matter of fact, for the most part, I want y'all to know, really it takes me 20, 30 minutes every day when it comes to my trading. It don't take that whole lot of time for me to do what I do in the market. 20, 30 minutes and I'm pretty much done for the day. Yep. So matter of fact, Barbara, let me ask you a question. What do I use to trade with? Do I have a computer?
No, you have never, that I know of in the 30 years, used a computer. You trade from your cell phone, from your mobile device. That's how I've always known you to trade. So you don't even have to have a computer
I'm
to
gonna
be
burn
able
on the
to
thing, so
trade.
we'll watch that.
Because Delvin certainly does not. And he's been doing this for 30 years from his phone.
Barbara, we can hardly hear you.
I said
So-
Delvin does not
Yeah.
use a
So it's important to
computer.
know. Yep. Most people think that because they've heard that or something, but we don't have to sit and watch every ticket.
So he doesn't have a special app that he has to put his orders in, does he?
No, he just calls his broker. That's how he
Yeah.
trades.
Yeah, man, I'm so old school. I know y'all technology has come a long way, and I can go online and put my orders in myself, but I figure that's what I pay my broker to do. So I pick up the phone and I do it the old way. But yeah, I want y'all to really think about what the things that's on this slide right here, because these are some of the things that keep people from getting going, from getting started, because they've heard or believe something that really wasn't true. There are people who do sit in front of the computer and watch every tick, but we don't have to. And especially the way that we trade, the system we trade, we definitely don't have to. There are some day traders that do, but in our style of trading, no, we don't. And like I said, the market doesn't, in our case, the market doesn't open on Monday. It starts back while we on this call every Sunday and opens up on Sunday evening. So I used to be sitting around, couldn't wait for Mondays. And then they blessed me with this Sunday evening. Oh my goodness, what? There's more trading we can do, guys. All right. I love it.
The next one is manage your account around the clock. This goes back to our rules. What's our number one? What's our golden rule? Who knows the golden rule?
10% of, no more than 10% of your income or your, to invest.
Exactly. You can manage your own account and control your own risk when you trade in the futures and commodities market. You get to do that around the clock. You don't have to allow the market to tell you how much you can risk. You can tell the market how much I want to risk. And that's no more than 10% on any one trade. You get to control your own account.
Barbara, we can hardly hear you.
Hear me now?
A little better.
Okay.
Yes.
Let me disconnect my headset. Okay, how about now?
Okay, let's try and see
Better.
what.
Okay, so I said you get to manage your own account around the clock. You don't have to tell the market does not have to tell you how much you can risk. You tell the market how much I want to risk. And that's no more than 10% on any one trade. You get to control your own account. And that's the really great benefit in this market. You get to tell the market, come to me. And I want to control how much I risk. And that's a huge benefit in this market.
Awesome. Johnny, take this slide, my friend. Is Johnny with us? He might have he had to go take care of something.
Yeah,
Barbara,
forgive me. I'm sorry. I'm back.
all right. Over to you, Johnny.
Why do the futures and commodities market exist? Well, that's a pretty good question. And the way I'd like to answer is this. You know, in Texas, corn is planted in March or earlier, depending on what part of the state you're in. If you tried to plant corn in March, early March, in Iowa, it'd freeze out. Okay. So when it comes to market, and there's a whole lot of corn coming to market at the same time, the prices would fall. And then in the winter, when there wasn't any corn, there wouldn't be none. So in order to spread the purchasing or selling of corn, or for that matter of fact, different commodities, if you can spread out the opportunity to purchase the corn for future delivery at different times of the year, then you eliminate a lot of the volatility that would occur if the supply hit all at once or the demand hit all at once. Okay. So depending on the commodity, it really helps with stability of the price of the commodity. Okay. For both the producer and the commercial user. Also, it provides the speculator the opportunity to get in and participate in the market, even though we're not producing or using the commodity. That's about the best way I can explain it.
So basically, Johnny, from what I'm hearing is that we really will have real large wild price swings if it wasn't for the fact that this market exists. You know, we could pay one price today for a 5 pound bag of sugar, and then tomorrow it could be a tremendously high, much more higher price. Is that what you're saying?
Yes, sir.
And this market helps stabilize and keeps the prices where it's something that
That's
it's affordable for everybody on all levels.
correct.
Man. And I bet you somebody think this market exists so people can have somewhere to gamble.
Now, it's a way to hedge. It's also a way to hedge your profits or reduce your risk.
So, Barbara, has everybody been participating in this market their whole life, or just their first time being a part of the market when they came to this class?
No, we've been participating all of our life just on the retail side. When you go in the store and buy a bag of sugar, you're participating just on the retail side of the market.
It's still
Yes.
hard to hear you, Barbara.
Yeah, so basically when we go in the store, guys, and do shopping, and some of you ladies, you more are more shoppers, better shoppers than some of us men. But you know, when we go in the store and we see a 5 pound bag of sugar on sale, what do? We see it on sale, we want to catch it while it's on sale, so we buy it when it's low. We've been knowing how to do that our whole life. We buy something when it's low because we know the price don't go back up. And that's what we always did. You know, only thing about it, when the price go back up, we never participated in taking advantage of that. We didn't even know there was a way for us to take advantage of that. But that's what this market allows us to do. That's what Johnny was talking about, the speculators. We get a chance to participate in the market, and you can be involved when prices go back up. You've been doing this your whole life. You just weren't doing it in the market. All right. Awesome.
Right. The dynamic of leverage, the game changer for the trader in the marketplace.
What does that mean? Leverage, Barbara.
Leverage is powerful in this market. And that's what we as the small speculator get to capitalize off of, the power of leverage, controlling a large contract, the value of that contract with a minimum amount, which is the margin.
That's exactly what I was looking for, Barbara. When we control a futures contract, that futures contract controls a certain amount of whatever futures that is. And when we get in the market, we can take advantage of something called leverage, where we would normally have to come up with a large amount of money in order to control that contract, right, Johnny? A whole lot. Matter of fact, to give you an example, I like to change the word margin. And I always tell everybody to help them understand what margin is, to transfer that word over to in your mind as a deposit. Look at margin as a deposit, because that's basically about as close of an example I can give you. Margin is simply a deposit we have to have in order to control a futures contract. And we have a way of going to find out how much that is. But basically, as long as you have that margin / deposit in your account, you can get into whatever commodity that you're trying to trade in the futures market. But you have to put up the margin / deposit in order to get into the trade. And the leverage comes in because if the margin slash deposit was not available for us to take advantage of, it would cost you tens of thousands of dollars to control that same amount of whatever commodity it is that you're trying to trade. Where this leverage we take advantage of allows us to come up with just a minimum, very small deposit, and we controlling the same amount of commodity. So it's huge. I don't know if Johnny's back, but when it comes to this, I think this is one of the most powerful things in the futures market, because this allows us to be able to participate. Because without this leverage right here, a lot of us won't be able to get in the market and trade futures. It would just price us out of the market because we wouldn't have, the resources to get into the market. So that's how powerful this leverage that that Barbara was talking about is. She said how powerful it is. All right. Is Johnny back? I don't think so. But what does leverage do? It allows the trader to take on larger positions, like I was just talking about. And that's one of the biggest things when it comes to what we do. Being able to take on these positions that we wouldn't normally be able to do if it wasn't for this leverage that we have. And that's what makes this so powerful. So just know we probably wouldn't ever be able to participate as speculators without this. That's how big it is. And imagine putting up a small minimum margin or deposit to get in the trade and making a huge profit on just a small minimum deposit you put up. And that's what it is. It could be the other way around too, where we can lose a lot. But we want to understand that this leverage just gives us a lot of power when it comes to the market, okay? Well, I think I just spilled the beans. But when it comes to margin, again, and if you don't have this written down, you might want to, because it'll help you understand when you see the word margins. And I think most people understand it better when I give these these other words that I like to rephrase it with. So margin, I like to tell everybody to look at margin as the same thing as a deposit. So think about margin in your head as a deposit. So margin / deposit. And then we have what's called maintenance. The maintenance is something that you have to have in your account. When you get into a futures trade, while you're in that trade, your account needs to maintain a certain amount of money, which is called a maintenance. And if you don't have that, you can't stay into a trade. If you're in a trade and you don't have the minimum amount, which is the maintenance in your account, you won't be able to stay and continue to trade whatever trade you're in. So
Hey, Delvin,
take that. Yes, Johnny.
I want to ask you a question.
Okay.
Why don't I have to have enough money to cover that entire load of grain or cows or whatever? Why is it I just have to have a margin and maintenance?
Well, it's a good question, Johnny. Actually, I would like to see if, I know we normally don't do this, but I would like to see if we can ask for a little participation right here. If anybody can answer that question before I do?
I want to take a stab at it, right? Your margin is your deposit, of course. Your maintenance is what you gotta hold in your account. It's almost like this is what's coming to me. It's almost like if you went to try to buy a house, they ask you, well, how much revenue do you have already? You know what I'm saying? If you're gonna finance, do you have anything to put up? It's like what you're bringing. It's like you're bringing a certain amount of revenue to the table. Although it's mandatory, it's your cushion, and you have some skin in the game. Man, I don't know why I thought about that, but that's what came to me.
Close. Anybody else?
Okay, if I have to have all the funds to do a trade, I will not be able to participate because of the cost involved. So when I have a margin, I'm able to participate. And we as small traders, I'm thinking, because we do that, we bring volatility to the market and so. So that is why we can participate having a margin. If it didn't have any margin at all, we as small traders would not be able to, some of us, because we don't have the finances to do.
Can I give everybody a hint real quick? What are these called? What kind of contracts are these?
Futures.
Okay, Delvin, you want to answer the question?
So what, Johnny?
Do you want to go ahead and answer the question?
No, go ahead.
Okay, the answer is, the reason I don't have to have the money up front is because this is a futures contract. This is an agreement between the buyer and seller that said that I'll pay a certain amount on a certain day for delivery of that commodity. So if I took delivery, I've got to have money for all that. Now, the difference between maintenance and margin is all I have to do is cover the volatility of the price. If it goes up or goes down, the difference on what I agreed to. We're only dealing in this margin and maintenance with covering the amount of the change in price on what I agreed to pay on the time that I initiated the contract, or that I agreed to sell at the time of the contract. Does that make sense?
Yes, it does, Johnny.
Yeah.
Thank you, Johnny.
All right. The amount of money you must deposit into your trading account to open a position in the futures market, futures and commodities market. That's the definition of a margin, correct, Barbara?
Yes, that's correct.
Again, the amount of money you must deposit into your trading account to open a position in the futures and commodities market. This is your definition of what that margin is. All right. Maintenance that we just talked about. You know, I always want people to substitute that word for balance. And what that means is the balance you must maintain in your account at the end of each trading day while you're in the trade. Remember I said if you're in a trade, you have to keep that certain amount of balance in your account or you won't be able to stay in the trade. And that's what that maintenance is. That's why I want you to substitute that in your head for balance. because you have to have that in your account when you get in the trade. That maintenance needs to stay in your account until you get out of that trade. All right. Ha ha ha. Margin call. Barbara. That's one of them words nobody likes to talk about. But we have to, because you want to understand what a margin call is. You may have seen it on TV in a movie or something, but it's a real thing. And a margin call is something nobody wants to be in, or you don't want to hear your broker say, that you're on margin calls. And what is margin calls? When the balance in your account falls below the maintenance margin. Remember, we just talked about that maintenance. The broker will call what is known as a margin call. The trader must deposit more funds into their account. What? I got to put more money in my account, Bob?
Yeah, the balance small.
to
Yes, you
bring that
do.
balance back up. Guys, I'm joking about this, but this is serious. You can be on what's called margin call. If you're not practicing the right risk management that we were just talking about earlier. And what does margin call mean? Basically, in a nutshell, in layman terms, margin call means that you owe the market money. You've lost more than what was in your account, and now you owe money. So understand that we can blow up our account, meaning we can lose what's in our account. But if you're on margin call, that means you've lost what's in your account and you have a balance that you need to bring current. And not a good feeling. Not something that we want to. That's why we have these rules, right, Bob?
Yes, exactly.
Because we don't want to be in this margin call position. And unfortunately, I have. How many times, Barbara?
3 times.
3 times. I've been on margin call 3 times, and I don't want to do that again. But just know this: you can't just put something on it. You can't tell the broker, well, I got 100 right now. I know I owe 500, but I got 100 of it right now. And I just put that 100 on it right now. On margin call, we got to bring that balance. That's something that we have to make good on. Okay. I know. I want to tell y'all an example, but we don't like to talk about this movie on our calls for a certain reason. But there's a movie out there where they actually show a position, a situation of someone being on margin call. And a lot of you know the movie that I'm talking about. And one of the brothers fell out. As a matter of fact, he had a heart attack. Yeah. So margin call is something that's a serious thing, and it's something that we teach these rules and the way that we trade so that won't happen to you. But it's a real situation about basically using proper risk management will help you to try to keep you from being in this position. All right. Anything you want to say on this, Johnny? I think Josh dropped on. I don't know if Josh want to add a few words, but before we move on, I just want to see if y'all had anything you want to add.
I'm good. I'm good.
Okay.
All right, good night.
All right. So what we got here, we keep the main thing, our go-to platform. Anybody know what that is, Johnny? Barbara? Anyone y'all know what that is?
Bar chart.
Man. I think this is one of the best things that could have came about. Barchart.com is such a blessing when it comes to trading, and not just for futures. People who trade stocks, um, as well, they all use Barchart. A lot of people use Barchart. I love Barchart because they are such a real friendly user platform, and I need to ask if Dr. Melba or Barbara, any one of y'all want to talk about bar chart. Um, y'all did such an excellent training on this platform. Um, I just feel a need to switch it over, turn it over to one of y'all if you want to take it. Matter of fact, Barbara, if we can hear you, okay, you want to talk about bar chart and walk us through the platform?
Yes. Okay, so this is the main first screen you'll see for barchart.com. And the good thing about this platform is that it offers a free account or a paid account. Delvin has never had a paid account, and so you're able to efficiently use Barchart without paying for it, but you can pay for it if you like. I know Barchart tends to have a lot of pop-ups on their screens and stuff. So if you are the person that don't like to get the advertisement and all the pop-up, you may want to get a membership. But it doesn't hinder you from using Barchart if you opt to have a free account. And you just click this right here. It says try Barchart for free. You sign up, give them your email address, you have a password, and it gives you an account. And the reason why you want an account is because when you go to use this and you go to a chart, if you begin to mark that chart up, if you don't have an account, you're not logged in, it's not going to save any of your information. So you're basically just doing the same work over and over again. So this is our go-to platform that is we use in conjunction with our brokerage platform. And so there's a lot of things you can trade up here, stocks, options, but what we do is we click right here where it says futures. And when we click futures, anything related to futures pops up here. So I just double click it and it's going to take me to the futures market overview. And it shows you a synopsis of some of the markets. But if you click full list, it's going to take you to all the different groupings for the futures market. It's going to give you a full list: currencies, energies, financials, grains, indices, livestock, metals, and softs. So I'll just click on the grains, which we know corn is Delvin's favorite commodity. That's why we call him Mr. Corn. And so it's going to show you everything you can trade in the grains market, basically. And it's going to give you the different contract months that you can trade. So there's corn, there's soybean oil, soybean meal, there's wheat, and so on. And so I'm just going to click on one of the commodities, and it gives you the symbol as well. You have the symbol, the contract name is corn December 25. And when we get to the other page, we'll go in more detail of what these things mean. So when we click corn, it's going to give you every month, because remember, like Mr. Johnny said, what are we trading? We're trading futures contracts. So it's giving you all the way up into the year of 2028, every contract month that you can trade for corn. And what you have to also understand is that it's not the same months for every commodity. Each commodity has its own months that you can trade that contract for. And so on this one, let's just say July 25, you're going to trade the July contract. It's going to let you know the last price, the last settlement price, where it closed at, what change in price it made, where it opened up at the highest amount it traded to, the lowest, what was its previous day that it traded at. It's going to let you know the volume. This number, volume and open interest, is very important in every market because the volume stands for the number of people that's in the market at the time. For this July contract, volume, open interest is the number of contracts in the market. This is 100 million. So if you see where it says 5, that's 5 million. It's not the number 5, it's not 5 people, it's 5 million people. This is how big the futures and commodities market is. These numbers are, they could just be astronomical. It's 100 million in 61, and there's 61,000 contracts that's being traded. So it lets you know the time, the day that the last day that it was. So this market says June 27th. So we're still on Friday for this market. And if you click here, there's different links. The good thing about bar chart, you can click and it takes you to several places throughout bar chart. So it's not just one click where it'll only take you to the watch list. You can find it in multiple places within bar chart. So I'm going to just click on a commodity, and it's going to take you to what's known as the contract specifications, really the price overview. And this is a really important page for every commodity. This is where you want to go because it's going to tell you a lot of vital information. And one of the most important things is the contract specifications. So it gives you a snapshot of what's currently going on in this particular market, where it's trading at price-wise, the volume, what we just saw on the previous page, and it gives you a smaller view of the chart itself. And we haven't got into charts yet. For those who, if this is your first time around, we're going to get into all of that, the reading of the actual chart and the months that time frames for those charts. So good thing about bar chart is technical and it's fundamental, and it merges the two for you. So it gives you a lot of information about corn. It keeps up with the status of corn. It tells you the importance of the market. So you're able to learn all of that, which is excellent. Whatever you're trading, you want to learn about that market. You want to learn the personality. You want to know something about that market that you're trading. And so this is one of the most important parts of the price overview page, the contract specifications, because you can't keep your rules for risk management, for one, if you don't know how much you're risking. Just like we just talked about leverage, the contract size for corn is 5,000 bushels. So you, as a small speculator, when you come in here and you get one contract, the value of it is 5,000 bushels. That's how much you're controlling. And you are considered the small speculator. That's the power of leverage. Now imagine how much money you would need if you had to have the equivalent financially of controlling 5,000 bushels. That's a lot of money. Somebody do the math and tell me what you would really have to have if it wasn't for leverage. And it gives you the tick size, 1/4 cent per bushel. We'll get into all of that on another call. Trading hours, 7 p.m. to 7:45 a.m. And 8:30 a.m. This is CST time. 1:20, it settles at 1:15. So that market closes at that time. So this lets you know the trading hours. It trades overnight. So, and like we talked about, one of the advantages of futures and commodities, you trade day or night, almost 24 hours a day. You're making money in this market. It tells you the exchange that this commodity trades on, the CBOT, the point value. Every time price moves up or down 1 cent, it equals $50. This number for every market is different. because every market tick size and the contract size is different. Just like the trading hours aren't always the same. This is the margin and maintenance, $1,155. This is the deposit you have to make in your account for this market to control 5,000 bushels, to control one contract. And you have to maintain a balance at the end of every trading day of $1,050. But you are controlling 5,000 bushels. Imagine that. And you don't have to take delivery on 5,000 bushels. You couldn't fit that in your yard. That's a lot of bushels. That's a lot of corn if you had to have that pulled up in your yard. And it gives you the first notice because there's future contracts. So at some point in the future, they're going to expire. So it gives you what's known as a soft touch, a first notice, June 30th, 2025, which tomorrow. It expires July 14th in 15 days. This means that you can't be in this contract after this expiration date. Then it gives you information about the seasonal chart. It tells you about the different people that's in the market, like we talk about commercials, producers, managed money, non-commercials, swap dealers, and other reportables, long and short. It tells you how many is in the market going long, how many is in the market going short. So it gives you all of this information because, as we know, we're not the only people in the market. Though we're the most important, we don't trade in the market by ourselves. It takes everyone to make this market work. It gives you some price performance, what it's been doing over a period of 1 month, 3 months, 1 year, 52 weeks. And then it gives you the data for other contracts in that month. If you keep scrolling down, it gives you a lot of fundamental information because there's two types of traders, fundamentals and technical. So this merges both of them for you. There's videos up here you can listen to. There's a lot of helpful information that you can, look at. So if you click see more, it's going to give you more in-depth, more detail for the contract specifications. You want to come here. And the reason why that a lot of markets have a daily limit, it's only going to allow you so much trading in one day. So this particular market has a daily limit of 35 cents. Not every market has a daily limit. Some markets don't have a daily limit, which is a good thing. It could go up a whole lot in that daytime and there's no limit on it. But with the grains, they have a limit. So it gives you the symbol, and again, the same information on the other page, the trading hours, the margin and the maintenance. It lets you know the last day of trading. And so I'm going to click back to this page. So right here up top, alerts. When we was talking about, we don't always have to look at the chart all the time. We can't sit all day looking at the chart. This is what this means. You can set alerts for this, and it will email you. It'll send you a notification if you want to know when price gets a certain amount or it drops to a certain amount. You want to know that because you want to get in that trade or you're studying that commodity. You can set an alert. And I'm not logged in. That's why you have to have an account. You can log in, set an alert. It'll send you a notification. You can make your own watch list as well for commodities that you want to watch and you want to study and you want to learn. And this is helpful if you're trading this because you want to track what's going on with that market. So you set a personal watch list in Bar Chart. And Dr. Melba, do you want to jump in?
Actually, you're doing a really good job, Barb.
Oh, okay.
Yeah, doing an awesome job.
Okay. So over here to the left, it's just a short panel. Remember I told you Bar Chart, you click in several places, it takes you to different places in Bar Chart. So this will take you to the chart itself. You can go to options. We're going to learn about options on some other calls, because you can also trade in the options market. This takes you back to the price page for this commodity if you click here. So these are just places where it'll take you other places in bar chart, basically. And I'm not going to get into the charts today, but just to continue on this page, it kind of gives you a synopsis of what's going on in corn currently. It's in a sale, so it'll tell you corn is currently going short. So it'll give you an indication without you going to the chart. If you didn't know much about how to trade, you could at least know this. Well, it's in a downtrend right now. You would know that. And it gives you other information as well, different information that's in bar chart. It may be stocks or ETFs or something of that nature, but bar chart has a lot to offer. I'm not gonna go too deep into it because we have to, progress to looking at the chart. But when you come to the full page of the chart, now this is where you want to be. So this is how you're going to look at your chart. There's a lot of tools that you can use over here to study this chart, to learn it, we're going to get into about 50%. We're going to get into the technicality of the chart itself. But I just want to show you this page so you can, be aware. So it tells you the price, the commodity, the time frames for corn, and you can build your watch list alerts, the same thing that you could do on the other page. But we're going to go through all of this on another call, because at some point we're going to be all charts. So don't worry and feel like I don't know anything about this page. What does that mean? What does that mean? We haven't got there yet, but we're going to. So that's it. That's bar chart. That's a short review for you. Delvin, Mr. Johnny, y'all want to add anything?
Yeah, I want to second what Dr. Melba said. You did a great job, great breakdown of bar chart, which I knew you would do. You and Dr. Melba had an excellent training y'all did on this bar chart. But yeah, that was awesome overview right there, Barbara.
Thank you.
Yes, bar chart is something that you want to be familiar with, because that's what we use the charts. You'll have platforms where you will open up an account, and every platform out there that you choose to open up your trading account, they'll have charts for you to use on the platform as well. I prefer to use these charts on bar chart because they just have the best charts out there. Nothing, not to say that you can't use charts on your platform if you choose to. I just think you can't beat bar chart when it comes to the chart. So if you want to get the best charts, and it's a really user-friendly, easy platform. There's nothing hard about bar chart. Once you get on there and start playing around, you'll have it down pat in no time. And but just know you do want to have that free account on bar chart, because Dr. Melba do not like those pop-up ads. Let me tell you.
No, she does not.
And when you get a paid account, you don't have to deal with all those pop-up ads while you're trying to chart. On your free account, you're gonna have pop-up. You got to keep Xing and moving them out the way, like you saw Barbara doing. But get your free account on here, because you're gonna want to have it when it comes to trading. Okay. Like Jamal say, it's free. Great job, Barbara. Do we have anything else?
We're Q&A.
Q&A. All right. So guys, every time we have a call, the way our process works, we always open up at the end of the call. Any questions, comments that we have. I know we went over a lot of stuff tonight, a lot of great information, and I know y'all got value out this call. But any questions or comments that you have, there's no dumb questions, please. We love to hear the comments as well, but come on with the questions. The floor is open.
So do you always have to do a full contract, or can you do half of the contract, or? quarter, or are you just obligated to one whole contract when you enter into a trade?
Okay, Barbara, Dr. Melvin, anyone y'all want that one?
Yeah, that's a good question. So yes, you have to do a full contract, but the beauty of this market is they have what are called mini contracts or micro contracts. And so what they do is they make the contract size smaller. And so for those of us that are starting out and our budget may be limited, but we want to get in the marketplace, when you get a smaller contract, a mini or micro of this, like say corn, we showed you corn tonight. There are mini and micro contracts of corn. Your point value size is lower, your margin and maintenance size is lower. So it's easier to get into a trade and to build your bank. If you're limited with funds when you're starting this new venture. So there, as far as the full-size contract that we showed you tonight, you can't trade a quarter of that contract or half of that contract, but you can choose to trade a mini or micro of it, and it's a smaller size contract, if that's what you're asking.
It is. Thank you.
You're welcome, dear.
Great question, though. All right, I know we got some questions out there. Come on, y'all. Comments too.
Hi, good night.
Hello.
Good night. Good night.
Oh, there she is. I've been wondering where you've been.
Yes, I've been out of circulation for a few months.
Mm-hmm.
So I'm anxious to get back and learn again. So I just wanted to ask if the margin call, if for some reason that person doesn't deposit that money, what happens?
Say, you said if by what reason? What? Say it again for me. I'm sorry.
All right. So the margin call is where you have to deposit more money into the account because you're below your balance.
Mm-hmm.
So if that person, for some reason, doesn't have that money to deposit, what happens in a case like that where the person doesn't deposit the money that the broker would have called to let them know to deposit?
Okay, so now that's when your assets come to play. All right. Meaning your bank account, your when you open up the account, you probably had to fill out information about, assets and net worth and all those type of things. But you have to make good on whatever you owe to market. So your assets will be your backup plan. But if you're on margin call, whatever you owe, you have to make good with the market. And
So in other words, there's no way.
Huh?
So there's no way that you can owe the market money. You must pay up, basically.
That's right.
Oh,
And Ms. Ingram,
okay.
the way that we teach this class where you should not be in a compromise where you do have a margin call. Because we teach
Right.
in a place where you protect yourself and you protect your bag, which is your account, with your
Right.
with the rules that we teach, as well as the way we teach to do the simple math that it takes to get in and out of trades and how to protect, your funds while you're in a trade. And so if you're paying attention, and you're asking questions and you're setting up trades and you're communicating in a Telegram group, if you're having a question, where this group is set up where there's a lot of protection around us to be able to ask questions, not to get ourselves into situations like that, and the way we teach the class. So that was a really good question. But those of you that are first on tonight, I just want everyone to know that the class is taught in such a way that you learn to protect your funds.
Great, Dr. Melvin. And to piggyback on what Dr. Melvin
Thank you.
said, if you heard me say that I have been on margin call, think about what Dr. Melvin just said. Those those situations were before this style of trading, the way that we're trading, like Dr. Melvin talked about. It was when I didn't have a good understanding on how to trade in the market. You know, once we start trading and using the system and the rules that, like Dr. Melvin pointed out, the way that we are trading today, you know, this is how we keep ourselves from not having that happen. But when I was inexperienced, I got in that situation. But like Dr. Melvin said, the way that we teach and trade is to keep you from getting in that situation. That's why you see us talk about risk management so much. Great point, Dr. Melvin.
Thank
Good
you.
question, Inga.
So I have
Yes.
another question. Will we be making, what do you call them, like mock trades or, I guess that's what I'm asking, a mock trade. Will we
Paper
be
trade.
able to do
And
that
I
in
was
this
going to
class?
say, if you do a paper trade,
Say it
Yeah,
again, Mr.
you
Chairman.
don't have to worry about them coming and repossessing your house.
is that what you're referring to, Pam? I don't know the phrase you're using.
I said mock, like, you know, those that aren't real, like they're not really entering into the market, like a mock trade.
So
Will
it
we
sounds like
be-
paper trading, demo trading,
Yeah.
simulating trading. That's what you learn here. You know,
Okay. Okay.
how
Thank
to
you.
take advantage of trading in the market without
Okay.
using real money before you get in the market. Yes.
Okay. Appreciate that. Thanks.
Mhm.
So I'll ask a question. So, Mr. Wright, how long did you paper trade or mock trade before you entered the market?
Okay. So, guys, back when I took the course from my mentor, he recommended a certain time frame for us to paper trade, you know, to give ourselves time to really get comfortable and understand what we were doing. And his time frame that he recommended was 90 days, which meant that it was a recommendation. You know, it wasn't something that you had to do, but that's what he recommended. So of course I wanted to follow the recommendation, but I got started paper trading and I was doing real good on my paper trade. I lasted 3 weeks, Dr. Melvin. You know, and I picked up the phone. The thing was, I went ahead and opened up my account when I got ready to start paper trading. I went in the Yellow Page and started looking, calling. So I found somebody who I could open an account with the funds that I was working with. Because I didn't have no money at the time. And I went ahead, got the account open, approved, and spent the money in there and funded it. And I started paper trading. And doing so well with the paper trading, I was like, man, I got this. Man, I'm good. I picked up the phone, called the broker, and got in the market for real. And the thing is, even though I didn't stick to the recommendation of paper trading for 90 days, even though I got in the market, start trading with real money, I still kept I kept on paper trading. I didn't stop paper trading just because I was trading with real money. But I didn't do what I was supposed to do, Dr. Mel.
And I just asked you that question because everybody's different. So
Mhm.
for Delvin, it took him 3 weeks. For me, it took me a good year and a half before I did a live trade. I paper traded that long and studied the market that long before I risked live money in the market. So I'm not saying, you know, we don't have a time frame that we
Mhm.
on this platform because it varies. It depends on, you know, how quick you learn, how much you want to risk your live money. You know, I'm not the gambling kind, so my risk is very low. My risk tolerance is very low. So therefore, I took my time to study the markets that I really enjoy, learn the personality, we say, of the commodity, as far as the things it does repetitively over and over and over, and you can actually see it on the charts. And so when you do that for a season of time, you get the confidence that you need to get into the market with live money. with the different techniques that we teach you to protect your bank. And so therefore, you minimize your risk. And so therefore, you're just that your profits are going to be greater than what you're risking. And so that's why I asked that question, so everyone knows on here that we each have a different risk tolerance, and you have to know yourself. And if you don't, the market will teach you. If you're an impatient person and you never were able to get yourself to be patient, the market will teach you patience. You know, if you're an emotional person and you were able to control your emotions, the market will teach you to control your emotions. So this is a place where there's a lot of character building that takes place in this marketplace for us as individuals, because the areas where we have struggled in our character, the market teaches us to no longer struggle in that area. Otherwise, you will lose your money. And that area of your character will have to improve in order for your profits to improve. So that's one of the things about trading. A lot of times we think of it as just putting a trade in, getting in the market, getting out. But a lot of it is character building. And it's fun. It's fun. When you master certain things about your character, it becomes a lot of fun.
Awesome. 3 weeks, y'all. Don't copy me. Don't be like me. Awesome. I'm loving the questions and comments, y'all. Anybody got any more comments or questions before we end? Any last questions or comments? All right. Awesome. Well, normally I say I hope everybody, but I'm gonna say I know everybody got value out of this call tonight.